Good morning, traders. WTI just posted its biggest two-day rally since June, surging right 8% from around 57.50 up to around 62 yesterday. And here's the twist: everyone expected the Trump-Putin summit in Budapest to actually ease tensions, but it collapsed on Tuesday night, and that is what actually triggered fresh US sanctions on Russia's biggest oil producers. And then, of course, it has also pushed oil prices higher. Now, the question is that can WTI sustain this move, and where are the next levels? Let me show you why this rally has potential for upside. First of all, let's just look at the catalyst initially. Okay, and then we will revert back to the technicals. Trump announced that they would meet with Putin in Budapest to end the Ukraine war. Market de-escalated, oil sold off, then everything reversed Tuesday. Putin refused Trump's ceasefire proposal because he demanded immediate freeze at current lines. So that's what happened there. And then on Wednesday, Trump retaliated. The US Treasury actually slapped sanctions on Rosneft and Lukoil. These are the biggest oil exporters of Russia. And obviously, the um, oil or revenues are kind of financing the war currently. But there is something else to take into account as well. While Trump tried actually to negotiate, Zelensky signed military contracts in Sweden, kind of deliberately excluding Trump, right? So this forced Trump to escalate rhetoric towards Russia to maintain leverage over Zelensky, hence the sanctions. W actually jumped around 6% just Thursday, okay? Biggest one day gain since the 13th of June when Israel Iran tensions also escalated. Now, we do have, of course, um, this resistance being reclaimed. And this is very important for technical context because we didn't come and rejected that level. We came and we actually penetrated that level. This is very important contextually. Okay, so we had this marked down for a long time, and we did have a short position as well here for a long time. We were expecting oil to move even lower, but of course, with um, break even stops. Okay, always. What happened though? We did have the 61.8 Fibonacci extension taken out, okay, at 56.80. And this is exactly where prices stopped. Okay, so now what is the next level to the upside? The next level up, guys, is close to the channel top, which is around the 68. Of course, we have intermediate resistance at 65.66, okay, but we are within this territory. So I think any pullback is a potential opportunity to buy, assuming, assuming, very big assuming that this situation remains at current sort of stage or state. Okay. Now let me just take you a little bit lower down on the 4 hour and why we're doing this. We're doing this because we have what is known as potentially, right? So any pullback, a cup and handle pattern. Okay. So if this indeed forms, what would eventually happen, and let's just assume that this is our top for now, and this is the cap lip, okay, we would eventually see potentially, right? And eventually this replicated. That means from the breakout point, potentially around here, right, we would move a measured move projection to around the 68, which brings us very close to the channel. So combining these two factors actually increases the odds of that for that particular idea play out. What else we're going to do? We're going to pull our Fibonacci as always and pay attention to something important. We've come all the way up to 38. So the next leg down indeed could be the 23. And then the breakout of the 38 again could be what give us a chance at 50, 61.8, correction to 50, and then another leg up to around the 78.8 or so. And then from there, of course, we see whether there is a pullback or further continuation. But this is a bit more of a, it's a different story to look at. But in the short term, this upside is supported by the RSI. So what I would want to see, I would want to see this leg to the downside. Okay. Um, Last thing, short, being short. Okay. Where are we? Down on the 1 hour. Look where we are. We have a very strong zone between the 59, 70, and 59. This is just below the 60 level, guys. So for me, I will be looking for the top. I'll be looking to long this with a stop below the 61.8. Okay. And initially, right, uh, we go to the previous stop, which is still a good trade. And when we reach the previous stop at 62, okay, we are going to move our stop to break even, okay, where we entered, or move it to, yeah, down here where we entered, right? And then we move our stop, our target higher. So we'll have the first target at 62, second target at 63 or somewhere between 64, let's say, and then I'll let the rest run. That means that the first target is the previous high, if we do fall, of course, right? This is one of the ideas, but given the volatility in oil and perhaps de-escalation, I would want to see something like this play out. Okay. Now, something like this playing out also gives us something else in play, and I will give you that as a risk factor as well, right? Um, so I would be looking for the first target to be around the 62, second target at 65. Okay, when we go to the first target, we're going to move our stop to the entry. And then when we get up to the 61.8, we're going to move our stop to here, okay, to the previous stop. Now, if this continues higher, we're going to place an ATR stop, okay? Now, what I wanted to tell you, the risk factor. All this looks good and is good. But if we saw something like this, what else is potentially here seen? Which again adds, but also a risk factor. And why a risk factor? I will tell you. Well, look, we would have a head and shoulders, inverse head and shoulders. The shoulders wouldn't be too deep, but it would be what it would be. That gives us room up to 66.20 at least, which is an important level. Now, why do I say a risk factor? Because if this something like this plays out, or we should consider this actually for an entry, even potentially. Look, we are not going to go as low as the 38.2. So we might want to move our entry at 60.24. Okay, so that means that the correction, potential pullback down to 60 is not going to go below 60, which makes sense given that, of course, that the 60 is a very strong psychological level. Okay, now, apart from this risk, of course, we do have a supply shock in India. Okay, um, but the thing is that also, OPEC Plus is adding only like 135, 140 thousand barrels per day monthly, which is quite small compared to the potential disruption from Russian oil. And you know, sanctions against Rosneft and Lukoil, these are not symbolic. Okay, so China and Indian refiners must comply now, or they're going to lose dollar access. So this is a big escalation towards Russia in terms of the oil sector. Okay, so the bullish case, it remains for me. I am highly convicted if that plays out and if the fundamentals don't change. We talked about what validates the continuation, but what could kill the rally is a surprise Trump-Putin deal. Um, well, there is low probability for now, but this may change. Okay, so we have to follow the market. Another one would be the OPEC, like Canada, turning the pipes on and flooding the markets with more oil. Another one would perhaps be like global recession fears from CPI figures or I don't know, employment figures in the US or the FOMC itself. But it will be more of a macro shock. But bottom line, this isn't just a technical move to the upside. Fundamentals also align at the moment, at least. Trump needs leverage against both Putin and Zelensky, and sanctions are his tool. Russian oil supply under threat, while OPEC can't fill the gap fast enough. And a cup handle button, right, with on the 4 hour, of course, RSI confirmation, could even essentially lead to a channel breakup, all pointing to higher levels even. Okay, that's like at least 10% upside from where we are currently. So that is your WTI breakdown from Thinkmarkets. Geopolitics just put a floor, in my mind, under oil. So you can also trade the breakout, trade the channel top, and catch you next time.